Welcome to the London Outlook for Friday, the 12th of January 2024. As usual, starting off with the economic calendar, what we can see is that we have significant dreadful news for the British pound. It is GDP, so given that it comes out at 9 a.m., you wouldn't be trading until at least Frankfurt opens, so that's perfectly fine. Whatever the news release is, we'll then fade our trading accordingly. And then in the New York session we have some PPI news, which is red folder but not considered significant enough to not keep trades open or allow the news to trigger any trades. So having said that, I'll jump into the 4-hour chart, and what we can see is last night, or early this morning rather, we actually body broke this 4H LPOS area, and that essentially tells us that the pullback phase has officially ended. Any counter trend shorts are now invalid going forward, and any long ideas must be based on this primary leg from the 4H 15 minute or 5 minute or even 30 minute for that matter. This is the candle that swayed things for me, so now I'm purely on a bullish bias. The 4H swing structure is the ultimate target and is the ERL target for this pro trend move. Then moving on to the 15 minute, there's a couple of things to point out here. One is from a weekly bias perspective, Thursday essentially made a new high of the week, suggesting that we're going to have a bullish week this week, and thus, because on the daily there isn't consecutive candles of there isn't 3 consecutive bullish candles already printed. If today was the 4th consecutive bullish candle or more, then we could say there's scope for a reversal trade. However, there isn't any scope for that. In addition to that, the narrative doesn't support any reversals, and thus on this Friday in particular, we can only trade longs. Then from a previous high and low of the day perspective, what you can see is that the high of the day was created before the low of the day, making the direction of the high and low of the day in this sort of direction, which isn't ideal, because if we were to anchor our fibs as such, it would mean we would be shorting rather than longing, because it doesn't align with longs. So given that fact, the best option for us is to wait for the primary leg to be extended, and then once that is extended, the fibs that become valid is obviously your current high and low of the day, as well as your previous high, as well as your previous low of the day, because now you have confirmation in the current day that we're sort of moving in the right direction now. So that's a bit of a patience aspect in that regard. I will mark out what today's low of the day is. This is a pre-Asia low of the day, and dependent on what the GBP news release is, we'll see how we can manage potentially getting into a trade after that, and hopefully holding on until the ERL target. In terms of the daily range, it's usually about 85 to 90 pips for actually 80 to 90 pips for the British pound. So if that is the case, then we'll try and align ourselves with one of these POIs and hold on until we actually reach our ERL target, since there's no real barriers to the left, and end the week off on a positive note. If not, we should still be quite proud of ourselves for sticking to our processes for the week, and remember that the outcome is irrelevant, it's the process that matters. Have a good London session.